Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, October 5th, 2010. Now this morning I'm talking about interest rate surprises. Now overnight in Australia, the RBA elected to leave interest rates unchanged at 4.5%, and they delivered a dovish economic outlook, which came as a little bit of a surprise to the market. I think there was a better than, it wasn't a huge expectation that they were going to raise rates, but it was better than 50%. Nevertheless, looking here on the 15-minute chart, you can see that decision came in, and boom, Aussie sold off against dollar right away. But it looks like it's retracing some of that move back, and a lot of that is due to dollar weakness, and we're going to get to that in a moment. So that was the first interest rate surprise that we saw last night. Now the second interest rate surprise that we saw last night actually came from Japan, and part of the deal with the Japanese interest rate decision is that it's usually a non-decision, meaning they're not going to raise rates. They're at an already low 0.1%. So what are they going to do? Well, actually, they did do something last night. They actually lowered rates from 0.1% to 0%, meaning that now there's absolutely no interest at all to Japanese yen, and this is obviously an attempt to get the yen to weaken. They've also said that they're going to increase, the Bank of Japan said they're going to increase their asset purchases, to also try and weaken the yen. And you can see right here, basically came up just under 84 versus dollar, but now sold back off again, and we are nearing, we can look here on the 4-hour chart. Okay, we're nearing pre-intervention lows here at 82.85. We're about 83 and a quarter right now on that. So it looks like they may be done with intervention for a little while. They're going to try and go this route to weaken the yen, but we're going to have to see what's happening. Right now, markets are being ruled by dollar weakness. All right, so money is moving to all these other areas. So we have an weak Aussie this morning based on a lack of an interest rate hike. Okay, but we also see that there's some risk taking going on. We've got a higher Kiwi, we've got a higher Loonie. Just take a look at that real quick. Okay. You can see here Loonie strengthening against the dollar. We've got oil prices up to around 82 and a quarter right now, and that's what's happening. As we see a weak dollar, okay, you've got money flowing into equity markets. Stocks are up in Asia, stocks are up in Europe, stocks are up here in the U.S., and we also have commodities higher. Gold's at an almost all-time high, 1330. Oil back to 82 and a quarter. So as you can see, when you have a weak dollar, you've got just money, hot money flowing out, and it's trying to find places to go where it can seek yield. All right, so one of the places that we're seeing money going is into the euro. And I'm just going to look here at the euro. You can see euro is back to I'm coming back to about 139. This was a Fibonacci retracement level I identified last week. Where is it? I don't want to see the weekly. Let's look at the daily. Apologies here. You can see, so the 61.8 retracement level from the sell-off of its 2010 highs, all right, is back to 139. So I'm expecting the euro to get back there in short order. Okay, we also have the pound. Pound is also higher. Same deal as with the euro, moving back, and it's potential that it could retrace all the way back to some all-time highs here versus dollar, and that's going to happen if we continue to see weakness here for U.S. dollar. Now let's see. We also had Chinese PMI came out a little bit weaker than last month, so it could be a sign that that their economy is slowing, but it's still pretty hot right now, so I don't think we're going to see anything happening there at this juncture. All right, and then we had Bernanke talking yesterday. He had a Q&A session where he said that further QE may be necessary, and also that politicians should think about really starting to limit the fiscal deficit, and that raising taxes in this environment may not be such a hot idea. So that's really coming as no surprise to anybody. And I guess if you look at the current polls for this election going forward, you can see that that pretty much everybody knows this as well. So things are starting to heat up here in the currency markets. All right, you've got a lot of countries trying to devalue. They want lower valued currency so that they can export. But as we know, this is a relational market. Not everybody can devalue. For one currency to go down, another has to go up. And right now, it looks like dollar is trumping yen right now, with dollar weakness really forcing some yen strength there. So as you can see, Aussie was lower. Just go back to that, but it's retraced most of that move because you know what? They still offer 4.5%, which is still great on the carry trade. So even though they're not going to raise any further, it's still better than what they're offering in New Zealand or Canada. So I expect expect to see the Aussie, this is a temporary sell-off, and I expect to see it move back here as well. So what we've got is we've got some really good trading action going on right now, and as long as these government actions don't lead to any sort of structural issues out there, I think we're going to see continued euro and pound strength. Their PMI figures this morning came in better than expected. All right, so there's a lot happening, but right now the theme is dollar weakness, and I think the only thing that's really going to turn that around is if we get any major bout of risk aversion, and that's going to be due to some structural issues that could potentially happen. So that's what I've got today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.